The forum, the CNBC TV18 Investor Summit. Well, today we had a turn of tables. Instead of us putting the questions to Minister of State for Finance Jayant Sinha, we got some of the top fund managers both from India and abroad to talk to Jayant Sinha about the road ahead for the economy and for reforms. So here's a look at all the action.
I think we would have definitely got the 8% target if some of the macro would have been in our favor. Obviously, we are seeing a global economic slowdown, and that's hurting exports. We've had a second monsoon that has been deficient. And if these two sectors had been a little bit stronger, I'm sure we would have surpassed the 8%. I think as we go into Q3 and Q4, we may well surpass the 8% because what you can see in the numbers right now is real momentum building in the economy. So when we look at Q3 and Q4, we may well have growth north of 8%. But of course, as I said, we've got the headwinds right now of a very slow global economy and of course a difficult situation as far as the monsoon is concerned.
Okay, Mr. Sinha, before I toss it across to my co-anchors here this evening, let me ask you, how successful was the Chai Pe Charcha on the GST? Is the GST going to be a done deal, sir, in the winter session of Parliament?
We are very hopeful. We are eternal optimists. We are continuing to push as hard as we can. The good news, I think, is that we have been able to narrow down the issues to a handful. And now we are working through these issues. And as you know, in any negotiation, if we can see the light at the end of the tunnel, that's always a reason to be hopeful. And because we do have now a set of issues that we can work on, there is in fact a process hopefully by which we can get to closure.
Three crucial demands that the Congress party has raised. Are you willing to give in on two, sir? At least two? To ensure the passage?
We need to find common ground, and of course we want to ensure passage.
All right, I'm going to leave the GST conversation at that, but there is certainly hope that we could perhaps see the GST bill being cleared by Parliament. Let me toss it across to you, Samir. As Sonia said, Samir has a great sense of humor, is candid, so he's going to kick things off. And your question for Jayant Sinha?
No, I'm going to ask him a soft question first just to get things rolling.
Warmed up.
First question only. So, Jayant, hi.
Samir, we've known each other long enough that I don't need the soft question. And of course, I have question hour in Parliament tomorrow, so this is going to warm me up nicely.
No, that'll be from the second question. And for the first question, after this GST bill is passed, what are the specific steps that are needed to actually implement it? Because I keep reading that you guys plan to start it on April 1, which I still find absolutely impossible, even if it is passed in the current session of Parliament.
Yeah, there are two parts to this, of course. On the one hand, we have the implementation, which includes, the GSTN, which is the network that will actually be the backbone for the entire system. It includes the training of the field formations. It includes all the coordination we have to do with the states. Now, as far as the implementation side is concerned, we are actually quite far down the track on it. We are quite well prepared, and if we had a deadline of April 1, 2016 to do the implementation, we could get it done. Now, on the other hand, we also have the legislative calendar. Once it's passed in the Rajya Sabha with a 2/3 majority, we have to get 50% of the states also to pass it. And once it's passed the states, we have to get the GST bill passed in Parliament. The GST bill is where we will actually establish the rate structure, the rates, and very importantly, what goods and services are going to be in which aspect of the rate structure. So all of that will have to be sorted out in the GST bill. That GST bill will then have to be passed by all the states as well, so that it can be law in the states. And it is this legislative calendar which is more challenging than the implementation calendar. As I said, the implementation calendar and the work we have to do on the implementation side is actually moving along quite well.
So therefore it means October 1 would be, can it be done halfway through the year, or does it necessarily have to be at the start of a financial year for ease of sort of for companies or whatever to implement it? And even how would you prepare your own budget without knowing when it is happening?
Yeah. No, you're exactly right. Those are in fact the challenges of starting it in the middle of the financial year. So we are obviously, taking into account all of these factors as we decide. On the whole, though, there is no reason why, if we think the benefits outweigh the costs, that we can't start it in the middle of the financial year.
My question is, when I look at the different schemes of the government, it doesn't seem to have any consistent philosophy or principles behind it. So, for example, we obviously are happy.
I'm sorry, Sameer. I'll have to interrupt
but
you.
I'll have to give
I'll have
examples.
to interrupt you right there because I can't allow you to.
I'll have to give you examples.
Allow you to get away with that.
I'll have to give you examples. First, I'll give you some few examples.
First, let me tell you the philosophy and the principles that we follow, and maybe that will require you not even to bring up your examples. How do you want to do your examples?
I think
first?
examples will put it in perspective, because I'm not talking a very wide this thing. But just for example, we recently hiked diesel prices and said they should be market determined. But a few weeks ago, we said that regional tickets should be capped. In fact, a few months ago, SEBI said that these poor guys should be paid less. Now, this is not market determined. Yesterday or today, we said that government should sell strategic stakes and even in hotels or whatever other companies, and you want to bring back the divestment department. But we have been hesitant to even say that we want to sell Suti shares. A few days ago, we say that we don't want to subsidize, let's say, R&D of pharma companies via tax concessions. But a few days ago, we said, let's say, for example, that regional airlines need to be subsidized. These are all not consistent with each other. That you have chosen that R&D in pharma cannot be subsidized, but airline at a regional level needs to be subsidized. There's no common market or philosophy behind these things, I think.
I would not agree with that, Sameer. My statement would be that if you look at our economic philosophy, the Honorable Prime Minister, the Honorable Finance Minister has spoken about it many times, and they've been very clear. What we are doing is a supply-side approach to the economy. It's investment-driven growth. We are building India's productive capacity. This includes the hard assets, which is power plants, factories, roads, bridges, ports, and India's soft assets, which includes the skills and employability of our people. It includes our regulatory institutions, and it also includes our innovation ecosystem. So we are building India's productive capacity. We are strengthening India's production base so that we can sustain high growth for long periods of time rather than getting into supply-side bottlenecks, which then result in a boom-bust cycle. So that economic philosophy is very clear. In terms of our economic principles, we've laid those out also very clearly right on from the manifesto that we put out in 2014 and so on. We've said that first and foremost we are a pro-poor government because obviously making sure that India's poor, deprived and destitute get a better quality of life is our moral responsibility. And because we are a pro-poor government, we have to be a pro-market government. We have to get market forces to work properly, and it has to be within the context of a well-regulated competitive environment. Number 3, we've said that we believe in empowerment, not in entitlement. Number 4, we have said that we believe in minimum government, maximum governance, that is a rules-based, non-discretionary government policy-making framework. And then finally, we believe in cooperative federalism. So this economic philosophy has been shared many times, spoken about many times. Now, of course, you can take specific instances. You can take, for example, the civil aviation example and say, why are you subsidizing regional carriers? Or you can take another example and say, in this particular instance, the compensation for mutual fund managers, why is that not a pro-market measure? And we can get into each of those, in great detail. But you have to remember that when you take policy making into account, you have to balance out regulation and the functioning of a competitive market with just letting an unfettered market work. So that balance between, what is required to have a well-regulated market and just letting pure market forces work is where all the judgment in policy making comes in. Now, you may disagree with the judgment. You may disagree with specific instances, but as far as our overall philosophy is concerned, I think that's crystal clear.
But the point is that you agree in the philosophy that you can control things which don't need control. Obviously, salaries of fund managers don't need control. You can say that the aim.
If you look at,
it's not my salary, so I don't mind. But
for every one example, Sameer, for every one example that you bring up where you think we are over-regulating, I can give you 10 examples of where we have lifted in regulations and deregulated. I mean, I can list out FDI, I can list out what we're doing in capital markets, financial services, what we're doing in coal, what we're doing in mining, what we're doing in power. I mean, there's hundreds of examples of where we have actually deregulated and let market forces work well. We, as I said, part of building up our soft assets is to allow our regulators and to allow our economic institutions to decide where that judgment is between regulation and market forces. There is no grand formula, or there is no simple way to figure in every instance where that line has to be drawn. You may disagree on that line in some instances, but overall, we have to let our regulators and our regulatory institutions operate. And of course, they themselves are subject to scrutiny, they're subject to appeal. If you feel that some of their actions are anti-competitive and are not pro-market, then you can appeal those and take those forward. We believe in an open and healthy debate in these matters. Every policy that we put out is put up for consultation first. There are lots of discussions, rounds and rounds of consultations, and then we arrive at a consensus.
First of all, thanks, because both you as well as Mr. Jaitley have been very approachable to investors, and that definitely aids to the confidence. However, what we see is that foreign investors are considered to be more important. And just to put the matters in perspective, this year, it's the domestic investors have pumped in 80,000 crores and has ensured that India is one of the best performing markets, even with a flat market. God forbid if these investors were not there, the markets would not have been where they are. But what we basically, it's not a complaint, but just an observation that, all sorts of SOPs are given to foreign investors in terms of MAT, in terms of P-note issues being resolved. But a sustainable tax incentive or, some kind of a structure where long-term money from domestic investors, retail investors come into the market, I think that is somewhere where basically maybe, we need to do some more work. So any comments from you on that?
Of course, in the budget, we included an additional 50,000 deduction for NPS. And so we are, of course, trying to make sure that we get long-term, steady capital flowing in from domestic investors, particularly retail investors. We are working hard on a universal KYC to be able to make it very, very cheap to be able to enroll people in long-term asset management and SIP type programs. And of course, it is our stated policy goal to be able to grow as much as possible the domestic asset management industry. And as I've said earlier, we're always open to great suggestions. We've been meeting with AMFI. I myself had asked for a consultation with AMFI 6, 8, 9 months ago, and we had a meeting at UTI, and then subsequently we've had other meetings with AMFI members as well. And if you have ideas or suggestions about what we should do with this budget or other executive action that we can take to grow the domestic investment management industry, we are all ears. And we'll be very pleased to meet with you and talk to you as to what might be the best way to take them forward.
Jayant Sinha, former fund manager to now Minister of State for Finance. How has life really changed for you? And now when you have a conversation with Samir, Naren, Nilesh and Sunil, do you feel differently about how to address their issues?
No, it just gives me an opportunity to be able to serve the nation and to serve all of you even better, because I do have some understanding of these issues, and I feel like I'm quite approachable to all of you, since most of you are old friends, and as people who've known me for many years will tell you that I listen well, and whatever makes sense and whatever is in the national interest is action that we take as quickly as we possibly can. And in fact, if you look at some of the things we've done, for example, the manner in which we've dealt with AIFs and InvITs and REITs, what we're doing as far as permanent establishment is concerned, the level playing field we want to create for all investment products, all those kinds of actions, I think, demonstrate that the domain expertise, the industry knowledge I have is now being put to good use to solve a number of issues that have been pending. And I, for one, have been dealing with permanent establishment for decades now, and we are getting those resolved. I think the industry should be very pleased with all that.
Well, plenty of food for thought, but the consensus is that India